What's up YouTube? Welcome back to my channel. For those of you that don't know who I am, hi, my name is Miguel and I'm actually documenting my journey to a $100,000 dividend investment portfolio, while also answering some of y'all's questions along the way, sharing tips and tricks. My channel is about helping others invest and learning from my experience investing into the stock market. And in today's video, I'm going to be answering a question that I get quite a bit over on my TikTok, so I thought I'd make an entire YouTube video about it, but how I pick stocks that go into my portfolio. I did make a video a couple of months back, but I'm going to make an updated one now, because since I posted that last video, I have about 20 to 30,000 more followers, and y'all may not have seen that video. So I decided to make an updated version. But before we get into that, don't forget to subscribe to the channel if you have not already. We're growing incredibly fast. I cannot thank y'all enough for the support. And then comment down below if this video helped you, or if you have any questions, and I will get back to you. And then lastly, like the video because it helps out the growth of my channel so much. But let's roll the intro. Now before we get into how I pick stocks for my portfolio, as y'all know if you follow me here on YouTube or on TikTok, I go over my portfolio buys and the value of my portfolio every single week. So let's hop into that right now. Now my portfolio has been getting a bit of a beating the past month or so, but as it stands right now, my portfolio is at $11,846.39. I'm down on the day $84.24, or about 0.71%. On the week, I am down $204.71, or about 1.7%. On the month, I'm down $305.85, or about 2.5%. On the 3 months, I am down $148.96, or about 1.24%. And then on the year, I am up $1,334.84, or just changed, or about 12%. Now, I am not worried about this at all, because even though I am down in the past month and 3 months, I am continuing to buy the dip on companies that I know are going to go back up in value. As we saw in all the passive income that I got last month, I made about $50. And with the volatility of my portfolio in the stock market, my dividends are ultimately going to increase as my value does increase over time. So I'm not worried about this at all. I'm going to double down actually, because now my stocks are on sale. Now the first purchase that I did this week was buying Hormel Foods. I bought one share of Hormel Foods at an average cost of $42.50 per share. And then we're going to hop into Hormel Foods. As we can see, I now have 16.19 shares at an average cost of $46.25. Down overall about $62, or about 8%. Now I knew going into Hormel Foods that they're extremely volatile. Like I said, I am a dividend investor and I'm here for the dividends in the long term. But I am dollar cost averaging into Hormel Foods because I am down, and I believe that they will go up. This is just a common household staple that I do believe people are going to continue to buy even during a pandemic. People need to eat, people need household goods, so I'm going to continue to dollar cost average into Hormel Foods. And then hopping into the second purchase that I did this week, I bought $64.04 worth of MRK. That ultimately gave me 0.89 shares at average cost of $72.91. And then hopping into MRK, I now have 13.56 shares at average cost of $77.58. And then as we can see, I am down overall $72, or about 6%. Even with MRK being down so much for me personally, it is still rated extremely high as a buy right now. They are a solid dividend paying company that I am going to continue to dollar cost average into, just like Hormel Foods. They are down right now, but I do believe that they will go up, and by me buying more shares, as we say, buying the dip, I'm going to get more dividends at a cheaper price. I am not worried at all about this correction in my portfolio. Like I said, I'm a long-term dividend investor. Yes, in it for the gains, but ultimately for those sweet dividends that I'm going to get paid over the course of the next 25 plus years. Alright, now that we got my portfolio value and the weekly buys out of the way, we can hop into how I pick stocks for my portfolio. Now just laying it down plainly, as a dividend investor, I want my portfolio to be sitting at about a 3 to about a 4% dividend yield. Now that is what's considered quote-unquote safe for dividend investors. That does not mean that the stocks in my portfolio are at a 4% dividend yield. That just means that my overall dividend yield is going to be anywhere from 3 to 4%. And because of that, I have some wiggle room to pick some growth stocks as well as to pick some more aggressive dividend yielding stocks. But when I pick my stocks, I keep that in mind. What's my dividend yield at right now, and how that's going to affect my dividend yield when I do buy these stocks to put into my portfolio. Now to help me out with this even further, I do use trackmydividends.com. It is a great tool. I have made a YouTube video on it before, going over all the benefits and all the tools of trackmydividends.com. But what this allows me to do is put a specific stock that I'm thinking about putting into my portfolio, and it tells me how it's going to affect my dividend yield, how it's going to affect my income, and if you pay extra, it's going to tell you the dividend safety score. Now that you know what your dividend yield is going to be and what you're aiming for when it comes to your portfolio overall, what I personally do when I'm looking at stocks to pick up for my portfolio is I look at dividend kings and dividend aristocrats. If you follow me on TikTok, you hear me say this a lot. This is because dividend kings and dividend aristocrats have been paying and increasing their dividends for 25 years for aristocrats and 50 plus years for kings. And the reason why I look at these stocks over any other individual stocks that may be considered riskier is because even during the pandemic, as we saw, dividend kings and dividend aristocrats continue to pay and increase their dividends. So you know that when you're investing into this stock, even if they go down, it has to take something pretty traumatic for them not to continue to pay those dividends. This gives me personally a little bit more of peace of mind when I'm investing into these specific stocks. Now that you know your dividend yield, now that you know which kind of dividend stocks you're looking to invest into, because there is a difference between passive investing and hands-on investing. For instance, this personal dividend portfolio that I'm highlighting right now on my YouTube channel, this is hands-on investing, and my Roth IRA, that's more passive investing. So if you're more of a passive investor, it'd be wise to look into ETFs, index funds, and bonds. This is because you put your money into those ETFs, bonds, and index funds, and you do not really have to think about it. You just put your money in, it automatically reinvests for you, and maybe you check on it once a year, see how it's doing. It's really passive and really easy. So it all depends on what you want. I personally want to keep my passive investing just for my Roth IRA, but I want to be more hands-on when it comes to my dividend portfolio. So like I said, if you're a passive investor, you're going to invest more into ETFs, index funds, and bonds. But there is a difference between all of that. Index funds and bonds are going to be way more broad, way less volatile. For instance, the S&P 500 does have 500 companies inside of it, which is why it's not as volatile as a monthly paying ETF like SPHD, PEY, SCHD, and so on. So it really does depend on what you want, even when it comes to passive investing. For me personally, with my Roth IRA, it's going to be VOO and VTI. Those are index funds that I'm going to put and leave there and just turn on automatic investing. For a little bit more of an aggressive ETF, but in my experience, SPHD and PEY are some of the most highly rated ones in the stock market. So we have gone over the passive investing route. Now we want to go over the hands-on investing route. And what I did when I first invested into the stock market and individual stocks was look at places that I went to on a daily basis. For instance, I went to Starbucks a lot, I went to Target a lot, I went to Costco a lot, and I looked up their dividend yield and I looked up if they were in the S&P 500 or not. Those are pretty easy to look into and figure out which one is best for your portfolio and for your style. So I am going to show you really quick my steps when looking at a potential dividend stock that I'm going to put into my portfolio. So the stock that I'm looking at today is ExxonMobil. I have had them on my watch list for a very long time. The only reason that I didn't is because they were extremely volatile and I did not know if I wanted to invest into them yet. But as we can see, going to the year, they have been doing pretty well. But if we go to the 5 years, we see that volatility going up and down. It's not that big of a deal because, like I said again, that shouldn't scare you away from investing into a stock if they have potential upside. Now let's scroll down to figure out their dividend yield. So as we can see down here, their dividend yield is at a 6.28%. They have a pretty healthy market of 230 billion. Another thing that I do go and look at on Robinhood is the analytic ratings. And as we can see going down here, it's rated really heavily as a hold right now and still rated pretty highly as a buy. Not a lot of people are selling it right now. So that kind of gives you a little bit of insight into what people are doing. Now, as we can see from doing a quick Google search, which is how I found out about all of my stocks basically, that they are dividend aristocrats and they have paid and increased their dividend for the past 37 years. But at the end of the day, this does look like a pretty good solid dividend stock to invest into. Now, of course, there's a lot more that goes into it past that initial look at this dividend stock. I do look at how it fits into my portfolio after that, and if it's a good fit, I go ahead and buy it. I hope that helps kind of break down what I was talking about throughout the video. Now that is all that I have for y'all this week. I hope this video helped you out in your journey to picking stocks for your dividend portfolio. Don't forget to like the video, it helps out my channel so much. Comment if this helped you out, or if you just want to say hi or what's up, or if you have a question, I will get back to you. And then lastly, don't forget to subscribe to the channel, and I will catch y'all next week. Peace.